This video is an uncovered Japan company research report on HENNGE EKK, ticker 4475. HENNGE is a Japanese cloud security software company whose flagship HENNGE One service sits between corporate users and cloud applications such as Microsoft 365 and Google Workspace. The investment case combines unusually strong recurring economics with a demanding valuation and one central question: can HENNGE keep growing as Microsoft bundles more identity functionality into its own platform? Start with the quality signals. In fiscal 2025, 99.2% of revenue was recurring. Gross margin reached 86.8%. Monthly churn fell to just 0.26%, and return on equity was 40.6%. Those figures explain the report's 14 out of 20 score, led by growth and macro fit. They also explain why investors already assign HENNGE a premium book multiple. What does the customer actually buy? HENNGE One is a per-user, per-month security layer in front of the cloud services a company already uses. It combines single sign-on and multi-factor authentication with email data loss prevention and cyber defense. The integrated bundle matters in Japan because HENNGE also provides Japanese language implementation and customer support. The premium HENNGE One Pro tier now represents roughly 20% of annual recurring revenue, giving the company a way to lift revenue per customer without winning a new logo. The income statement shows a genuine software scaling story. Revenue rose from 4.8 billion yen in fiscal 2021 to 10.9 billion yen in fiscal 2025, a 5-year compound rate of 22.5%. Operating profit grew much faster, from 380 million yen to 1.8 billion yen. The operating margin more than doubled, from 7.8% to 16.4%, as the high gross margin increasingly flowed through the cost base. The profit conversion is clean. Net income climbed alongside operating profit to 1.36 billion yen in fiscal 2025. Rather than being driven by a one-off gain, HENNGE also carried no interest-bearing debt at the report date. That gives management room to keep investing in products, sales capacity, and overseas experiments without depending on external financing. Cash flow is stronger than accounting profit because customers often pay subscriptions in advance. Fiscal 2025 operating cash flow reached 2.73 billion yen, and free cash flow was 2.66 billion. Deferred revenue of roughly 4.7 billion yen creates negative working capital. Customers effectively fund part of HENNGE's growth. That is a valuable advantage, although it should not be mistaken for revenue already earned. HENNGE's durability rests on both market position and workflow. The report estimates about 65% of Japan's single sign-on market, with 3,731 corporate customers and roughly 2.96 million contracted users. Once identity rules connect every employee and cloud application, replacement becomes disruptive. Local language rollout and hands-on support add another layer of differentiation. The 0.26% monthly churn rate is the clearest evidence that those switching costs are real. The operating model is simple: retain nearly all existing subscriptions, add new customers, and move more users into premium tiers. Annual recurring revenue ended fiscal 2025 at 11.1 billion yen, up 27.2%, and reached 11.9 billion by the first half of fiscal 2026. But growth had slowed to 14.7%. That deceleration is not fatal, yet it is the number investors need to follow most closely. Management's North Star is 20 billion yen of annual recurring revenue by fiscal 2029, roughly double the fiscal 2025 level. That requires mid-teens compounding rather than a return to the fastest historical pace. The plan rests on low churn, new logo wins, premium tier upgrades, and 4 newer products, including HENNGE Endpoint. The practical constraint is recruiting. Management says sales hiring is the hardest bottleneck, with the plan assuming roughly 45 net staff additions a year. The largest strategic risk comes from Microsoft Entra ID, a competing identity service that can be bundled with Microsoft 365. If a free, good enough option satisfies the median Japanese customer, HENNGE's anchor product becomes harder to sell. HENNGE's defense is the broader identity, email, and threat security bundle, plus local implementation support. Existing customers are clearly staying, but slower annual recurring revenue growth may show that new customer economics are getting tougher. Watch ARR growth and churn together. At the report's July 3, 2026 price of 1,248 yen, HENNGE traded at 24.4 times forward earnings, 10.6 times book, and 3.2 times sales. The author's base scenario reaches 1,755 yen by fiscal 2028, about 41% above the reference price. The bear case is 772 yen, down 38%, while the bull reaches 3,185 yen. These are analytical scenarios, not price targets or recommendations. The report's conclusion is balanced. HENNGE is one of Japan's higher quality listed software businesses. Recurring revenue, exceptional gross margin, very low churn, strong cash generation, and founder-led execution. But the market already recognizes much of that quality, leaving a thin valuation cushion if growth disappoints. The research score is 14 out of 20. The key monitoring list is annual recurring revenue growth, monthly churn, operating margin, sales hiring, and the competitive impact of Microsoft Entra ID. This is educational research, not investment advice. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.